Shahrul Azizul. I'm from BA144B. In this video, we're going to explain about company analysis, which is Dagang Exchange Berhad. So let's start with company background. Dagang Exchange Berhad is an investment holding company with investment working information technology, IT, energy service and energy sectors. The DNEX group encompasses 22 companies, both with subsidiary and associate level investment. Dagang Exchange Berhad is significant trade facilitation and energy service provider in Malaysia. The company operates in several sectors, including corporate, which is an investment holding company, information technology IT, which is provide IT hardware supply, delivery, installation, testing, commissioning, and maintenance, and development, management, and government services, B2G, business and others, and energy, which is specialized in upstream oil and gas explorations, production and sale of oil and gas related equipment and services, as well as engineering, technical assistance, and engagement in power plants. The company's information technology section earns the most revenue.
Hi, my name is Raja Hardi bin Raja Faisal and I would like to talk about trend analysis. Trend analysis tries to predict a trend such as a bull market run and then ride that trend until the data suggests a trend reversal such as a bull to bear market. Trend analysis is based on what has happened in the past and gives an idea to the traders of what will happen in the future. Based on the company DNEX, after analysis, we can see that there are no long-term trends or a main trend that holds from 9 months till 2 years. Next, there are 3 secondary trends, which is a trend that holds from 6 weeks till 9 months. And the trend of the next company on this secondary is sideways, uptrend, and downtrend. Finally, the next also have a minor trend that is a trend which holds from 3 weeks till 6 weeks. The minor trend of the next company is a downtrend.
Okay, so based on DNEX chart, we found that there are 3 price patterns. The first one is bearish flag. From the chart, we can see that the price is on a continuation pattern and there is a 1-day momentary halt before it started to drop from the 1st of December until the 2nd of December. So next one is gaps patterns. We notice that there is a lot of gap patterns from DNEX charts, which means that there are lots of time when no trading takes place. In this chart, we consider this as a down gap. It is because the price pattern started to drop after this gap. It is due to no trades being made during the 1st of June 2011 until the 1st of July 2011. The reason may be that the company is on hold, which may result to a higher price afterwards. The third one is falling wages. Notice that the chart that the price is rising and lowering in the same direction for a long period. From the triangle that we marked shows that the breakout point which consider this as a falling wages pattern.
I'm going to talk about the first technical overlay indicators based on DNEX stock market is single SMA using 20 days moving average. Based on the chart given, I have marked the first buying signal or it called bullish signal, which on 9th July 2020. It is because the price line has crosses above the moving average. It's the opportunity for traders to make profit from DNEX at the price of 20 cents. After that, on 8th September 2020 has given the first sell signal or bearish signal. I made that is a sell signal at the price of 30 cents because the price has crossed below the moving average. The stock must be sold quickly to gain profit, exceeded 50% profit. After that, I have marked the second buy signal, which is on 22nd of January 2020 at the price of 26 cents. This is the best signal from DNEX. First, obviously, it is because the price has crossed above the moving average, and second is because the price has just rise from 26 cents to 1 ringgit, which can make 284% profit, and until now DNEX still on the uptrend pattern. On 28th May 2021 has shown the final buying signal for now because the price has crosses above the moving average. According to single SMA indicator, the DNEX price will rise a little bit from 70 cents to 80 cents, then the price will reverse down. Next is double SMAs by using 20 and 50 days moving average. In 9th July 2020 has shown a sign of a golden cross, which is a first buy signal for traders. It is called golden cross because a stock's short-term moving average has crossed above its long-term moving average. Buying DNEX using double SMAs is as a choice of indicator must watch everything it is of a short-term stock. Next, on 9th September and 12th September 2020 has shown a death cross, which is a choice of a sell signal for traders if they buy in 9th July 2020 at the price of 18 cents. It is called death cross because a stock short-term moving average crosses below its long-term moving average. After that, in 22nd of January 2021 has shown another golden cross because the stock's short-term moving average has crossed above the long-term moving average. Based on the chart given, that signal should buy and hold for a couple of months because as long as the two lines has not crossed each other, the price will continually increase. Then in 28th of April 2021 has shown a final death cross, which the stock must be sold quickly to gain profit or to minimize losses that had been made a transaction at the price of 24 cents.
Moving average convergence divergence MACD. Based on the graph above, using the MACD in technical analysis can help us determine the buy and sell signal. For example, the buy signal appears on 8th July 2020 with the MACD have crossed above the zero line, or in 20 January where the MACD crossing above the signal line which indicates the buy signal. On 17 March 2021, the histogram turns down above zero which shows us a sell signal.
And now, I will talk about another technical indicator and oscillator which is rate of change ROC based on DNEX stock market. Based on the graph given shows ROC that made us crossover of overbought and oversold set levels. As we can see that DNEX has become one of the uptrend stocks in Bursa Malaysia due to COVID-19 pandemic. First of all, on 10th September 2020, the price of stock has been fall a little bit from 21 cents to 17 cents. According to ROC's interpretation, when the ROC line has crosses below the zero line, it has shown the sell signal to the investor. In other words, the price has reached overbought level. Next, on 21st January 2021, the price at 24 cents started to show that DNEX will become an uptrend pattern. It is because that according to the fundamental analysis, DNEX has won a bid to acquire semiconductor fabricating companies such as Silterra from Khazanah Nasional Berhad. From that moment, DNEX has risen 6.76% and started to invest for 373.78 million shares. From that transaction, DNEX has made a profit for 70.91% on December 31, 2020. Based on the graph given, DNEX price has risen from 34 cents to 1 ringgit within 4 months, which exceeded almost 200% profit. However, the price started to show an uptrend pattern until
Relative Strength Index. Okay, the Relative Strength Index is a measurement used by traders to assess the price momentum of a stock or security. The basic idea behind RSI is to measure how quickly traders are beating the price or the security up or down. RSI puts this result on a scale from 0 to 100. Readings below 30 generally indicate that the stock is oversold, and while reading above 70 indicated that it's overbought. Traders will often place this RSI chart below the price chart for the security so they can compare its recent momentum against its market price. For DNEX, based on chart analysis, you can see the charts given here. We have 4 overbought and 2 oversold.
Next, One of the indicator and oscillator listed in is stochastic oscillators, which is the technical momentum indicator that compares a security closing price to its price range over a given time period. The oscillator's sensitivity to market movement can be decreased by the period or taking moving average must be adjusted. Based on the graph given, it can be seen that DNEX stock price on 15th February 2021 has shown a bullish divergence. It is because that the price has break above the resistance and it is a buy signal. On 13th January 2021 has already shown that the price has gone to oversold or buy signal because the price has crossed below 20 at the price of 20 cents. Buying at this price will gain a lot of profit because according to fundamental analysis and stochastic chart shows that the price will stay up and trend for a few months. Next, on 20 March 2021, based on the stochastic chart has shown that the price has crossed above 80, which is the stock must be sold quickly to gain profit. On 18 August 2020, also shown another buy signal, or it called oversold due to stochastic line has crossed above 20 with the price of 23 cents. On 16 November 2020 has shown that price has crossed below 80 and has gone to overbought, which is a sell signal, and it must sell the stock to take profit before the price reverses back down. After that, on 18th May 2021, shown a new buy signal because the price has went oversold or the price has crossed below 20. However, on 10th June 2021 has shown the last sell signal because the price has crossed over 80 and the stock must be sold quickly to gain profit from the sell signal.
My name is Idham Rushdi and I will explain about the Williams percent R. Williams percent R, also known as the Williams percent range, developed by Larry Williams. Williams percent R moves between 0 and negative 100. A reading above negative 20 is overbought, and a reading below negative 80 is oversold. And overbought and oversold reading doesn't mean the price will reverse. Overbought simply means the price is near the height of its recent range, and for the oversold means the price is in the lower end of its recent range. If we take a look on the chart, during August, September, October of 2020 and during April, May of 2021, the indicator is below the oversold line and climb across the negative 80 line. So it means that the market is giving us the signal to buy the stock. In this chart, the buy signal is indicated by the green arrow. Next, on July, October and December of 2020 and February and May of 2021, the market is overbought and then falls below the negative 20 lines. So during that time, we should sell as the market giving us those signals. That's all from me about the Williams percent R.
As a conclusion, DNEX is a good company for investors to invest in, as it is a stronghold company that always go for uptrend. We can see that it makes a big profit for the past months for 3 times. It is a great start for potential traders to invest in DNEX stocks and existing traders to keep the stock and buy more in the future. As the saying goes, invest more, earn more. This can be used for a low price stock because if you invest the minimum amount, you cannot really feel the profit, but if you invest high on it, you can feel it as it multiples more times than any.